Welcome to Tuesday Night Live, everybody. Thank you for tuning in and having us as a part of your Tuesday night viewing. Cool. So today I have a special guest, Peter. Peter, thanks a lot for coming on.
Hello.
Live. There you go. You got Regan saying, "Peter, my man."
Hey, Regan. How you going?
So it's good that everyone gets to see you and gets to know who's writing their loans and building their portfolios. So I always say, a lot of people say to me, "Hey, Birchie, it's a deal. Show us how to get that deal. It's cool, all that." And I love to take the credit for thinking I'm so great for finding people cool properties. But without the finance is 50% of it. And without being able to get the money, you can't do the deal.
Yeah.
That's probably the biggest reason why people don't do deals. They can't get the money.
Yeah, exactly.
And Pete's the man.
I am.
Pete's responsible for getting hundreds of double-digit portfolios and works here at Zinger Finance. So today, get your questions ready and shoot them through if you have any burning desire questions for the night. But we'll get into the topic of discussion. I do have my news articles as always, but we'll ask Pete a few questions and then we'll hop into the news articles. Peter goes to me, "What are the news articles about?" And I was just printed some off, and I'm like, "We'll talk about them shortly." So,
yeah, we'll get into it.
So I guess just the audience may not know who Pete is and what you do and all that sort of stuff. So maybe just give a little bit about what you do here at Zinger and
Sure.
all that.
Yeah, so I'm a mortgage broker for Zinger Finance. I sort of grew up in this industry, Rose being my mother.
This is Rose's son.
Yep.
Yeah.
Yep.
How old were you when you first started? Were you like young?
I don't know, yeah, before I could even really think for myself, I think I was already sort of...
It's not child labour when it's for mum.
No, anything for mum.
So, Rose has been my broker for 18 years. I've known you for that long, and you've literally grown up in your mum's business and then you come on working at Zinger. And
yeah, it's crazy how the world works, honestly.
It is. So, what do you do? Like, you're a broker, but like there's lots of brokers out there, I guess, in the world. Anyone can go and use any broker. What makes Zinger different, and what makes dealing with Pete different with building a portfolio?
Yeah, well, I guess just in terms of what separates us from pretty much anyone else is that we primarily deal with investors, and therefore we do a lot of investment properties. Of course, we do people's own occupied and stuff, but I think where mortgage brokers are sort of separated is when it comes to complicated deals. And that being people having complicated portfolios, you'll typically see that in a lot of investors. So, I've dealt with all sorts of investor scenarios like SMSF, self-employed. You got your PAYGs, you got trusts, all that stuff, companies, etc. So, with Zinger Finance and with me, I think we've just dealt with a wide range of scenarios that many brokers wouldn't even really come across, or they'll just pass off and say it's not possible if they can't fit the square peg, basically. But we're always looking for solutions, and especially when it comes to investors, we're really pushing for servicing to work. Just so that we can just keep going and going and going. So, I'd say that's what definitely separates us from pretty much any other mortgage broker.
And most mortgage brokers are like a one-man band. Like, you've got like a dozen colleagues that you can just go to and say, "Hey, who's got an idea about this? How would you structure? Anyone else come across this?" Like, you don't write off a deal until if Zinger writes off a deal, it's like, okay, it's not going to work.
Yeah. I think what's really good is just that everyone's so experienced. We have a lot of clients, and therefore we have a lot of scenarios. So someone would have surely in the office would have surely come across something at least similar. If it's not exact already to the situation for someone else. So I think it's really good. We can share ideas and see what other people have done, and we can factor that out into our own the clients that I'm working on based on past experiences. So it's really good.
I think when we look at most brokers out there, most brokers have their own sort of self-interest, where it's like, if we did loans for $1 million principal place of residence, right? Pete, if I said, let's do $1 million loan today just for one deal, it's the person's first home, they're buying $1 million property, you'd be like, fuck, I ain't seen one of them for a long way. If you go to your normal broker, you should be asking, I think everyone should be asking broker lots of questions, right? And I think this is a good test for everybody. And I'm really throwing Pete on the spot because I was like, what are we going to talk about today? Pete's got some questions, some things that we're going to run through and that. But I think that everybody should be asking their broker a certain list of questions just to understand their broker's capacity. Because I joke about the fact, I've joked about this for 11 years since Zinger Finance started, that we're sort of like a charity here. Because if we run a mortgage brokering firm in a typical sense, we would get a homeowner that comes in for $1 million mortgage and we get paid the commission from the bank. It's the same no matter what. But we're writing loans for 150 grand properties, right? If you're someone to build a portfolio of 7 properties and get $1 million, you have to do the same work 7 times over.
Yep.
But you're not just doing it the 7 times over, you're doing it 14 times because you've got to buy the property, then you've got to rip the equity out of it.
Yep.
Then, and there's lots of rework. So 14 times the amount of work what a normal broker would do for one. And it's very easy for a lazy broker or just normal brokers to be like, oh, you should just buy the bigger one for $1 million, right? And if we did that, our clients would get stuck.
Yep. It's very easy for, I think, just brokers to throw in the towel there and we'll just take the easy way out.
And we find that brokers quite often, and I know you'll probably laugh when you see this, you'll be like, oh, you're talking about, but when brokers do deals, if they know they're coming to the end of the client's tenure of what they can do, they'll lock the interest rates for 2 years. They'll cross their loans together and make sure that they're stuck with them.
Until they get that commission and everything like that.
Pretty ruthless. They say real estate agents are dodgy and stuff, but brokers are
brokers can be just as bad. I've heard a lot of stories about stuff like that, even like clients who come to me with fixed situations basically, and it's just a lot of untangling sometimes, but we get there in the end. But it's just a lot of planning and a lot of trusting the process. Obviously, they were burnt by a previous broker, so we need to regain that trust with them and just sort of show them the way through, literally showing them the plan so that they actually can get behind something that is a bit more tangible than just being told over the phone or telling them to just sort of trust it. Sometimes it's just really important that we can regain that trust for some people.
I saw recently a client that settled some properties that you did the finance for, you were the broker for them. I don't know the specifics, you can fill me in on the specifics. I think he bought about 6 properties in one day and they're all cash because he couldn't do a loan for a period of 4 years or something because his loans were all screwed up. We're able to get into a safe spot, you refinance, pulled out
it's like 1.6 mil.
1.6 mil worth of
something
equity.
Crazy, of equity. I think we're able to just purchase, just properties outright and help build the cash flow, help build up the servicing as well. So,
This guy now has added, I don't know, 6, 7 properties.
Yeah, it's a whole bunch.
Flag. Sort of. I think he had 7 or 8 that had bought him over the last 10 years. Conservative investor, and then we just doubled the portfolio basically overnight. And those properties are all cash outright. We structured the loans that way because it was in the client's best interest, and they can go get loans and take those titles elsewhere, which is very, very important. So, cool. What are you finding happening out there in the finance market? Like I said, lots of people wanting to do stuff.
I think people are just as keen as ever, but I think what holds people back is obviously the interest rates and all. I know the RBA sort of stopped increasing it, but we're just getting, we're just trying to find ways and just more solutions for people who have equity, but they're sort of locked up with servicing. But there's almost always a way. It's just a matter of planning and sort of, sometimes it can take, sometimes it can be a game of time and just waiting, whether that's if we're doing deals that isn't necessarily going to improve the situation immediately, but later down the track, then we can look at, after we do this deal, then we can look at pulling that equity in and going again to another lender and stuff. So I think these days you typically come across a lot more planning for the future than things that are happening instantly, because of the fact that we just need to be a bit more not careful, but more conscious of how we want to structure the client's financial situation. So
when you do a loan, you're not looking at getting a loan to that. We can get loans for people, it's easy, right? But it's not about the loan for today. You're thinking about 2 steps down the track.
Exactly.
And that's very important. Like investors don't think about it. It's like, oh, how do I get that property today? And then it's like,
Yeah. So like, for instance, with just going back to that situation with my client is that, like, we're going to look at pulling out like around 1.6 mil in equity. And while that's not, that's not going to give you an immediate cash flow, but you're going to use that to purchase more properties, which will give you more income, which then will improve your cash flow more for the future. And then,
take those unencumbered.
Sorry?
Take the unencumbered.
And help boost the cash flow, and then eventually we can look at doing stuff with those properties in the future, and further in the future we can look at doing stuff with those unencumbered properties to look at purchasing more. So
where previous loans that been crossed and jumbled up and messy, these are now literally all the loans that are standalone. They've pulled out equity. They've used that equity to buy properties outright, and literally just like pictures on the wall and artwork people have. This person's in charge of like 7 titles now that they can put on the wall if they wish.
Exactly right.
Do as they please. Cool. So just a couple of questions just getting today, Pete, and then I'll jump into my news articles. Then we'll answer a couple of questions, and I'll leave the floor over to you to go through things. What is the most unexpected or unusual place that you found inspiration or creativity from?
Honestly, like I guess like it's honestly the office, because I like coming here to work at an earlier age. I mean, I've always sort of been like, I sort of understood what Rose did, and I've never, like, before this I never like directly worked in like an office complex and all. But I realized that as I've worked here and just seeing how everything sort of works in terms of like strategies for your financial future, and just understanding like what the purpose of saving is. I think that's a really important question for anyone like my age, is to ask yourself, what are you actually like saving for? Which was answered to me when I realized how important it was to sort of invest for your future. And investing in properties was obviously what I just saw in day out, and realized like, I had a moment of like an epiphany where I realized that it's just really important to get your foot in early, and investing as early as you can. At least for me, that it sort of inspired me to really like focus on my future, and set myself up so that I can live easier later down the track when I get older. So as cliche as it sounds, I honestly just seeing how everything moves day in and day out in the office, and just understanding like whether that's passively learning or actively learning, just the property market and everything. It was honestly like it created a pretty strong epiphany for me, to sort of get my savings in order and figure out what am I actually doing.
Yeah, and you've got multiple number property portfolio now, and you've bought properties, and how often, like, we can talk about it all day of the week, like people go, oh yeah, that's nice, you talked about buying properties 20 years ago, Birchie, but Pete, you've bought properties when you came on board to work in Zinger. Like, how long after you bought those properties did you pull the equity and buy the next ones?
Yeah, like the first one only took a few months. I think it was like 2 months, I think. Yeah, and that grew, I think, close to 100K in equity pretty quickly, right after settlement. And I was able to pretty much secure a second one not too long after that. And I'm looking for my third one. I'm just waiting for the right one to come across. But
still working on that too, man.
Yeah, excellent. Yeah, but happy to pull the trigger whenever.
Cool. And I guess looking at it, like, it's interesting you say that, because I never asked the question. It was a question here to ask you, and thinking about that, just your answer. Like, I guess it's interesting because you're seeing other people that are coming on board. What's the youngest client you would have had?
I think I've had one my age. I think I had one my age, or a year older than me. Yeah.
Okay.
Yeah.
What, your age beforehand or your age now?
My age, I think they were, at the time I was 21, they were 22, or I might have been 22 and they were 22 or something like that. Yeah.
I know that I've got clients that I don't know who looks after the team, but some of they're about like 18, and you're seeing people at your age that's like, doing deals and all that, and it's like, shit, these guys are doing it, why can't I do it? I'm seeing the back end of it.
100%. I mean, I've worked on deals, like me personally as a broker, I've had deals my age, but I've seen people, like I've seen other people in the office who've had people like 19, 20, just sort of, they've saved up well from like whatever they were doing in high school, and maybe they've got a job now. And yeah, I've seen how that stuff works, and it's really cool to see, because you realize that these people are really doing it for their future. So yeah.
And you see that there's people that are double your age and
Yeah.
triple your age
Yeah.
that are trying to do it, and you've got the ability to do it now, and
Yeah.
you're seeing how they can do it. And
Yep.
It's cool. Appreciate the feedback, mate. That's makes me feel good seeing that you're pushing forward. And
It's important. It's very important.
Cool. And do you recall a moment in your career when you had to take a leap of faith, and what was that, and what did you learn through the experience?
Yeah, I think in my career, I guess like the big one that really comes to mind is like making that leap from becoming like just like working as a broker support, just sort of in the back end, into the actual like broker role. I guess after seeing everything at work and realizing like what we're actually doing for people and helping people achieve their financial goals, or people purchasing their dream homes or anything like that, I thought, yeah, like originally I came in like sort of just doing my job for the sake of doing my job, but I realized there's a lot more to it. And taking that leap of faith and really committing to being a broker, and I guess like in that is like just trusting my mentors, that being like obviously you and Rose, but all colleagues, the senior colleagues and everyone like that, just to trust that they're putting me on the right path for my job and my career, and that I can sort of look to them for answers, I think was really important, because prior to this, like I said, I didn't have really any other, like I've worked with Rose like at home and everything, but I haven't had like a full-on job like this where I was able to turn to people for answers or anything like that. So just really trusting, I guess, the process and the people around me, and just trusting that they're all the right people, which they are.
Yeah. One of your colleagues today just came to me before we came online, that's why we're a little bit late online, and told me that we had this client that couldn't get loans, couldn't do anything. And he's at a point of retirement. He came on 10 years ago, right? And he spoke the other night at an event. And we're able to get him a 17-unit complex.
Oh, yeah.
Just out of the hat, right?
Yeah.
And those decisions that he did 10 years ago, structuring it took about 4 months to get this. Everyone had said, no, you can't do it. No, you can't do it. He came to us for finance because he used to use a bank many years ago. His loans were there. It's taken us a good few months to make it happen. And looks like he's going to get this deal that is $150K a year passive. That'll be retirement.
Yep.
So,
yep.
Yeah.
There it is.
Cool.
There it is.
So, So let's get into some news articles. I'm going to read some news articles. Then I'm going to ask some questions to you about how we can help everyone that's watching us and all that. And some questions coming through. Comments. A couple of people commenting on my hair. Thanks, folks. Went on that big trip and I had to cut the big dirty ratty off. It was getting knotted, right? Far North Queensland heat. It was getting threaded. It was really, really bad. So, I had to cut it off. So it's unfortunate. Not because I wanted to. It was better. Everyone says it looks better. I know it looks better. I know it looks better. So we'll just get the elephant out of the room. Someone said here, Nathan, I slept with the government and I caught a UBI. That's a pretty good one, right? The government's always trying to screw us with a UBI. That's pretty much what we're about to talk about here, folks. There's some interesting news articles. Nothing too exciting coming out yet. There is some interesting things happening if we want to go down the roads of geopolitical and health crises potentially occurring and stuff like that. But we're not going to go there today. We're just going to talk about the economy. And this is my first article here, and it says Australia to be functionally cashless by 2025, which is quite interesting. Should be scary for everyone. And if you're not too sure what a UBI is, it's Universal Basic Income. It's a government stimulus check, which they give out, like JobKeeper, JobSeeker, and all those sorts of things. And they will continue to do that the more troubles that everyone gets into. But they'll be taking a part of our soul, I guess. We wanted to make sure we're obedient and we're doing certain things, and they'll make more expenses or higher taxes or higher prices for people that are on a lower credit score. And we're seeing, credit scores when it comes to finance, but when it comes to social credit systems, like if you've eaten too much meat, or if you've driven your car too far, if you've travelled in an aeroplane too far, then you've gone over your budget of what carbon credits you can use and stuff like that, which is how everyone's saying here that they're getting screwed from the government. But let's go into this article. It says Australia is rapidly heading towards a cashless society, with one expert predicting physical money will be completely gone by the end of the decade. Australia is rapidly heading towards becoming a cashless society as banks crack down on withdrawals, close ATMs and branches, and ban cash altogether, with one expert predicting physical money will be completely gone by the end of the decade. I've got these trades that I use, and some of them just want cash, and they're very good. So bless them, bless them. I give them some cash sometimes, and sometimes I give them a card, and I say, "Hey, use the card. Go do whatever you need with it." But today I had to go to the bank, and I was in the Blue Mountains. Went to a bank. ATM closed. It's like, hang on a second. So I went inside the bank, and they go, "We don't have any cash. You have to rely on the ATM." And it's like,
really well.
how the fuck you can get money out, right? Fortunate enough for me, I didn't know if it was like, just the magic touch. I went back out, ATM worked, but it hadn't been working for hours. I got cash out, took 2K out of that one, went to the next machine, chucked another card in, 2K out of that one. So I think everyone wants to play around with the banker's game. Make sure you've got bank accounts with every different financial institution. So you've got on-ramp and exit ramps with every single bank, and if there is ever an issue, you can transfer your cash. But they all become totally cashless. So goes on to say Macquarie Bank this week announced it will be phasing out cash altogether next year, following similar moves by Commonwealth Bank, NAB, and ANZ to stop handling cash in a few branches. This is coming. And 5 years ago, people said in my YouTube comments, "Birchie, get off the drugs, get off the bags of coke, right? You're off your head. This is never going to happen." I've never touched coke or anything like that, but it just sounded so crazy. And the things that I said would happen, happened. And here's the things I was saying 3 years ago that are happening now. So you can plan for it, you can protect yourself, you can put wheels in motion. But yeah, so that's the first article about that. I've got this one here, which I've got 2 fuel articles, right? I just want to read these articles. This is more of just a fun fact, right? So I've got my big petrol guzzler car that takes about $400 worth of petrol it takes, right? Every time I fill it up, it's like a poker machine. You put it in there, it's like, but I've got my little car, right, and it's a little Suzuki, right? Just funny, right? People laugh at it. What's Birchie in a Suzuki for, right? But it's good. You can park it on the side of the road and leave it there, and it looks cool and all that. So I filled up today, and it was $2.54 a litre.
Really?
Yeah, for petrol.
Wow.
For petrol, right? And I talked about this a long while ago about inflation. And it's just common mathematics, right? It's like real basics. And no one gets it, but it's all lied. It's all lied about. Everything's lied out there in the media. So we look at it and we think, okay, if the petrol price, what's the biggest cost? Let's say, I don't know, we go to the shops and we buy a bottle of orange juice, right? I bought a bottle of orange juice today. I was getting paranoid after drinking the orange juice. Like, you get the orange in your I haven't had orange juice on my face. You can drink it. It's
all the pulp and stuff.
The pulp and shit, yeah. If you're stuck on your beard. So let's say you got a bottle of orange juice, right? A bottle of orange juice is $4, right? What is the cost of that? You've got some oranges that grow on the tree, you've got some water and all that. Wages have gone up. So that's another expense that's added to the orange juice bottle. But then you've got the farming equipment that takes the oranges off the tree. What's the biggest expense of the farming equipment? Petrol.
Right, yeah.
And then you've got the juicer. What's the biggest expense of the juicer? Well, it's the electricity, right? Then we've got, what's the next biggest expense? Well, we've got to ship it from the farm, put it in the bottle. So you've got the bottle manufacturer, which uses, what do they use? Petroleum, right? Because the plastic's made of petrol, right? So anything in plastic's going to go up higher, right? Is that why they're trying to go to paper and stuff and take it away from it? Who knows? But then we've got that. Then we ship that orange juice from the farm or the manufacturing plant to Coles Woolworths. How does it get there? It gets there in a truck, right? Gets there in a truck, and then what happens? Well, it goes into the pallet, and then the staff take it off. So there's labour. Then it gets put in the fridge. And when it goes in the fridge, what does it do? It consumes electricity.
Yeah, it's all about power, right?
So if that electricity and all those resources have gone up from $2 to $2.50, there's a 20% increase there, right? So just that one basic commodity that's needed goes up. well then it has a flow-on effect with inflation.
Yep.
So these numbers haven't really, caught up, and there's no way of catching up. But when you see the blame for it, it's quite humorous, right? So petrol's $2.50, right? And you go fill up your car, and that's what you're going to see. It's going to help push people towards electronic cars, which are a trap in my mind. But it's also got another thing to it. So let's just go through these two articles, right? This one here and this one here. So we've got news.com and we've got ABC, Australian Broadcasting Communism Network, right? So the news.com, the RBA warns Chinese economic contagion. It's China, right? Let's blame China again, right? China started a virus. China did this. China did that. China's taken out jobs. No, they were given the instruments, which is their financial makeup, to become successful. They're a producer. They're a nation of this. But they just love blaming it, right? A spillover from China's weak economy and surging petrol prices pose significant challenge to taming inflation. Economic contagion from China and soaring petrol prices pose a significant risk to the Australian economy, the Reserve Bank has warned. Released on Tuesday, this is from the RBA, right? This is from the RBA notes. This is what they're blaming it on, right? Yeah. Released on Tuesday, the minutes from the RBA board's most recent meeting, at which it held the cash rate of 4.1% for the third consecutive month, showed that the returning inflation to the target could be uneven. The board notes that the recent rise in petrol prices, which have surged above $2 a litre in eastern states, clearly demonstrates easing price pressures will not be uniform. The meeting minutes also showed deepening concern over the risk of China's embattered property sector boarding property, blah, blah, blah. So they're blaming petrol prices on China, right? China. So then let's go to our Australian broadcasting communism, right? Over here, right? And it's always an agenda, right? Like we're just given these topics to talk about. Anyway, why are fuel prices so high, and when is the best time to fill up? Australian motorists are paying eye-watering prices for fuel, with the national averaging reaching $2.04 per litre. The highest average petrol and price rises since seen the aftermath of Russia's invasion of Ukraine. Right? There's a little logo on the top bit here, which I can't read the bit that's underneath it, right? But it goes on to say that Russia is the cause of it, right? So the last article, which was from the RBA bosses, said that it was China, right? Yeah. But then we've now got it saying that it's Russia, yeah. Right? So what is it, right? And this is why I refuse to go on the news, because they just lie about these things. And if I know what they're lying about things that I know, what are they going to do about things that I don't know? Yeah. So it's just interesting when we talk about inflation being controlled or whatever. This is a far bigger game than the RBA. They're not one article have I seen the RBA has robbed the nation because they've printed too much cash, they've taken on too much debt as a nation, every country is failing, our dollar is toast. Or whatever. We're just blaming these other common enemies that we can go, oh, let's pick on Chinese or pick on Russia or whatever, right? Or pick on the boogeyman, the virus, the aliens that come next, climate change, whatever they're going to blame, right? We'll see an article and we'll say that on there. It's crazy. But then it takes us to this, right? We don't see them saying anything about the RBA done anything, right? Because who's the controlling powers that are here, right? Interesting. But we see articles like this one that comes out, and it says Australia's Big Four reveal plans after major bank scraps cash. So now one bank's got out there, and now all the banks, which have taken away half the ATMs in the last 3 years, minimised cash withdrawals, taking cash out of their banks beforehand, they're like, okay, this is a foot in the door. We can now start talking about the discussion of taking cash off the table. Australian banks reveal their plans on going cashless after one announced its move to scrap cheque, cash and phone interest payment services. The Big Four banks have reassured customers they will maintain in-branch cash services following Macquarie Bank's unprecedented move to phase out cash and cheque services entirely. Commonwealth, ANZ, NAB, Westpac confirmed on Friday that there are no current plans to go cashless. This comes after Macquarie Bank announced it would phase out cash and cheque service across its banking and wealth management products from January to November 2024, meaning that if you are working with the Macquarie Bank, I didn't even know they had branches or anything like that, but they're stopping you from being able to take cash out of the bank, so they can only pay you in not legal tender anymore, but just digital format of that, which is third line forcing us, which is illegal in consumer law anyway. Third line forcing us, which they're forcing us to use an alternative, which is not what it's intended to do, which is against the Constitution, which I'm not going to get into politics, but that's kind of why we're going to see all this voting about the voice thing and all that coming out, because they want to try and change the Constitution. Instead, you'll be able to make payments digitally a safer and quicker and more convenient way to bank, the bank said in the statement. Well, I know that if I have cash in my pocket and the ATM doesn't work, then I can give someone cash. I know if the bank doesn't like what I posted on social media, that they can't control me and stop what comes out. If because I've got a rat's tail, then they don't like me, so then they go, well, this guy looks like a threat, he's a terrorist to the country, we're not going to let him take his cash out, right?
Freeze his accounts.
Freeze his accounts, he's, whatever they want to do, right? Whatever they want to do. The changes will also impact customers' pension and super accounts, while the bank will stop accepting payments via telephone May next year. This comes 3 months after the Treasurer announced Australia's cheque system would be wound down no later than 2030. 2030, it's an interesting date there. The government will work with industries to minimise adverse impacts to consumers and businesses and ensure vulnerable Australians have the assistance they need to switch to other payment methods. So they're going to educate them, which is why the banks now look like a cafe more so than having those big screens up, because they're turning them into, come sit on the lounge and I'll show you how to set up your digital payment method and get you onto that. It's a trap. It's a trap for everyone. But hey, if you've got only one entrance to the bank and that's it, then we're kind of, start. But so it says here, Combank says that they have no plans to phase out cash, withdrawal and deposit services, which is just interesting. So they're saying it, but if you go to the bank and say, hey, I want 10 grand, they're going to say, what do you want 10 grand for? I saw this meme and a lot of you guys tagged me in it recently, which was some Lebo guy going to the bank and saying, I want to buy drugs, bro. I want to get this. I want to get the missus. He's like saying stupid things, and no one would give him money out.
Cash,
And someone would give him 2 grand. They tried to direct him there. But it's the reality. It doesn't matter if you say, I'm an upstanding citizen. I need to get it to pay the tradesperson. I need to do this. I need to do that. We can only give you $5,000. We can only give you $2,000. Go to the ATM and get the $2,000 out. That's their job. And that doesn't give people security, because if there's only digital currency, the money's never yours. It's always the banks.
They always have control.
And here we want to give people the control and put the power back in hands. And property does that. And that's what we specialise in. And we sometimes go off track and talk about other random things which help people's lives out. But if people like my my aquaponics setup and stuff like that, they're like, if you can't get your money out of the bank, you can still eat, right?
Yeah.
I went and caught some fish the other day. Look, these big perch have grown up. They're like, just under a foot long, like maybe 10 inches or so now. And I'm like, I can cook these. I've got a couple of hundred of them in there, breed them, and just breed them, right? So I ain't going to be controlled. But anyway, I digress. A lot of people come to us, they want to exit the matrix, they want to be able to live life on their terms. What does that mean? To get to financial freedom, they need to get the right assets, which is what I help them with, and then for them to get those assets, they need the funding for it, and that's where you come in with the team specialise in. So a lot of people are getting told, what do you think people are getting told at the moment? Like, what's stopping people from buying at the moment from their normal brokers?
I guess the interest rates, and therefore they can't service anymore. Is probably the main one that we see.
Have you been able to help any of that?
Yeah, of course. There's always a solution. It's just that for the most part, brokers tend to not look hard enough, and they don't. If you don't, like I said, if you don't fit the square peg, then they'll just can it. Yeah, it's easy because then they might have they'd rather work on they might have another one that has more potential, a higher potential lead that they'd just rather go to than spend the time sort of trying to fix, the person that they're already dealing with.
Yeah. That's actually how I met your mum, because I was talking to your brother. that's his brother.
Yeah.
And then when I spoke to him, he's like, my mum was a broker. And I was like, I just want to buy more properties. The bank had crossed my loans.
Yep.
I had a little dragon card from the St. George Bank growing up as a kid. And I thought, I'll trust the bank that I went to. Give me a loan. They gave me a loan. I was like, great. I went for a second loan, a third loan. They're like, I'm the expert. I'll tell you how to do a special. It's good. It's easy. It's safe. It's good for tax. It makes your life easier.
Yep.
I didn't realise what the fuck I was doing. And I got stuck at like a few properties. And the thing is that they set me up on a portfolio loan.
Oh, yeah, okay.
And they'd crossed all my properties together. And they said they didn't service the things. And they had full control. Like, I just want to refinance one of my properties. I've got equity in it. We can't do that. So I had to restructure my whole affairs because it was screwed.
I've had my fair share of clients who come to me, either they're fixed to all hell or crossed into oblivion. You come across some pretty unfortunate scenarios, but it's always possible to undo it all, especially after some time's lapsed. We'll be able to like uncross or break away from the fixed contracts and just help you sort of start again, basically. Yeah.
Cool. And it just as a little disclaimer out there, people's concern today before we come online is I want to give everyone the greatest amount of advice and guidance that I can do today. I'm scared of crossing over in any financial advice because he doesn't like to give financial advice because he's not a financial advisor and that's not what we do. But so just before we go into the cool stuff we're going to talk about, none of this is financial advice. If you do require assistance on that front or whatever it is, reach out to the team. If you need the financial advice, we'll put you in contact with those people. But if you need structuring advice, finance advice around your loan products, Pete can have a review of your position one-on-one and give you a strategy of options of different things that you can do in order to get to where you want to be.
Yep. So
with that being said, no financial advice here. What are the most common things that you see? We've talked about crossing and the fixing and all that. Is there anything else that you think people should watch out for if their broker makes a suggestion or a recommendation on that will get them screwed where they can't move forward in the future?
Yeah, well, I think I guess like the obvious ones, is crossing and fix. Those are probably the two biggest ones, and you'll hear it a lot, but it's very typical that you would see these kinds of situations arise. And a lot of the time it can be more for the brokers than it is your goals. I think it's really important that you marry up the decision making by the broker to what your actual needs and objectives are, which you would have gone through with the broker like at the start. Some other ones, you might find that they're just sort of keeping you in the same cycle of lenders and not really branching out, which might mean that you'll probably run into a wall quicker than one who's willing to sort of expand past that being because you'll probably receive news that you can't service quicker than what you're anticipating. Because they're very once someone is really comfortable with the lenders they deal with, they typically don't want to branch out. So sometimes you might find yourself just in the same loop of lender, or like sometimes you see them with one lender. And
one,
then,
2, 3, or 4.
Yeah, like a lot of the time, like I'll have someone who'll come to me and they'll say, oh, like my broker said I can't service, and then I'll look at their portfolio and they're all clumped in with one of the big 4 lenders and that's it. Like there's no other alternative, it seems like, at least for the broker who was originally working on it. So
So I've got a question because I find it very important for people to know. I might make a little statement in a question. So there's obviously different layers of banks. You've got your big 4, your NAB, your CBA, Westpac, ANZ, then you got second tier lenders. Who are they?
Like you got your premium ones like Bankwest and St. George, but you've also got like First Mac, you got like Pepper, you got like Latrobe and stuff. That's sort of branching into the third tier, but like you got Bluestone,
Liberty,
Resimac,
There's all different ones. So ideally, if you're starting out, you want to go to the big 4, utilize all their products and services, their equity ability. Because if you go to a first, what's the benefit of the first tier over a second tier?
Yeah, so a few benefits just to note. One is generally they'll cover your valuation fees, which is always a good thing. If you're saving costs trying to get these deals done, that's always a plus. Typically, the interest rates are better, especially with the Big Four. You're able to, as a broker, you're able to negotiate the rates a little bit based on the amount of exposure you give to them. Obviously, they're a lot more like reputable in the sense that like you'd feel more comfortable being with these lenders over the second tier lenders, but mainly the interest rates and valuation fees, you end up saving costs. The turnaround times typically are quicker, although some second tier lenders can be just as fast, but I guess just there's more manpower with behind like the Big Four lenders. There's more workers and stuff. You typically see things done faster. So if you have finance clauses and stuff, it's a pretty huge thing. If you can stay with the if you're doing deals with the Big Four, they are on average quicker. So yeah, you might not lose. You can save your deals and stuff if getting it done quick.
You can with third tier lenders, you can't get fixed rates as much
Yeah.
as what you can with Big Fours.
Yeah.
Valuation models, so you've got more options. So if you
More options, yeah. So yeah, with the Big Fours and all, there's different, more variety of valuations. So you'll have like generally like either a desktop valuation, which is a software valuation that spits a result back to you pretty instantly. At most, it might take like a day. You got curbside, and you got a full valuations where someone actually physically goes out to look at your property. Curbside just being they look at it from the curb, and then a full valuation is when they actually go in and inspect it. Yeah.
And you've also got contracted sale. They'll just take your contracted sale if it's structured right.
Yep.
So there's 4 ways there, and yeah, and if you were to go to a second tier or third tier, why are they better?
So with all of this said, it really does come at the expense of servicing, and for investors, that's probably like the number one priority is that as long as you can keep going again, that's probably the thing that is in a lot of people's sights as an investor. So because the big four lenders are generally they're the most conservative lenders that is out there in the market. You do get like the fees saved, you get better interest rates typically, but you will hit a wall very quickly with the main tier lenders. Servicing will become an issue very quickly, and that's when second tier lenders can come in and they have more flexibility with servicing. At the expense of, I guess, there are some higher interest rates. You will have to pay for the valuation fee typically, but it means that you can service for your next properties, and you can keep the ball rolling there.
People ask quite often, why do we go 20% instead of 10%? Like, I've got 100 grand, I could buy 3 properties at 200 grand a piece going at 10%, or I could buy 2 properties at 20%. And we don't give people financial advice, of course, but we give them the knowledge of what they're working with, at least, and knowing that when they go to the bank, if they use a 90% or an 80%, what are the challenges that someone at 90% would overcome versus an 80% lender?
Yeah, so the first thing is obviously you got LMI mortgages, LMI and LMI companies that will come into the picture. So you'll have a third set of eyes looking at your application, and they will also determine. They pretty much hold the most power in that, because if the LMI company is not willing to give you the loan, then the rest of the money, the extra 10%, then the deal just falls through, and you have to either commit to something like an 80% or So you got a third set of eyes looking at you with their own criteria that you're not even really aware of. And I've had applications decline because of that. And the worst part is they won't really tell you why. So there's a lot of ambiguity there. But also, I guess in terms of servicing, if you're doing 90%, obviously you're getting an extra 10% loan. It eventually eats away your servicing to the point where you might miss out on 1 or 2 properties just if you keep going with 90%. Your repayments are obviously higher, and generally when you do 90%, the interest rates. The interest rates are just higher. You're paying more of a premium to get a higher loan amount. And I guess the main benefit just being that you have a small deposit to make.
It's good in some instances, but it also puts some new parameters on you, because if you have to, if the back end of the bank, they flick a few switches and go, okay, this is a valuation method you're using, then for example, a full val might say on your file for a year.
Yep.
Versus doing a desktop and then doing a full val and doing it in 2 different stages.
Yep.
If you go to 90%, you try to pull out the equity. The bank may not give you the equity out, they may not value it, but the next bank will value it with the higher equity. But then you have to pay the mortgage insurance again, or you have to go back to 80%.
80%, yeah.
Cool. And there's people, I'm sure there's people watching that have really, because we deal with sophisticated sort of positions as well. And I see there's lots of questions coming through. I want to grow my property from 8 to 30. Let's go, Zinger, right? So, Nick, if you guys want to chat to Zinger, there is a bit of we had that event on the weekend, and we had lots of people, like hundreds of people that booked in at meetings with Zinger and whatnot. So I had a live speaking event, which I did the other day. And the team were there, and they booked out in I don't know how long they are booked out for, but they booked out, all the brokers are booked out busy.
Yeah, very busy.
But there's a link in here that you can go onto and connect with us and book in a schedule to chat with Pete or to the team. But there's people watching us and they're like, how do I get from 8 to 30? How do I get from, I'm a self-employed, I'm a contractor, I'm a single mom, I'm a, I don't know, whatever their situations are. You see sticky ones all the time. What alternative options are there out there? What can we do? What things have you seen that have worked for people and helped people out?
Well, I think firstly is utilizing second-tier lenders. I think will grow your portfolio, way more than if you were to stick to what's comfortable. And I've already spoken on it a bunch of times, but if you only find yourself with the big four, moving around there, then there's probably something you've definitely got a lot more capacity to service. It's just that your broker hasn't really stepped outside of that the main tier lender atmosphere and looked into other alternatives. It really is important that you speak with a broker that understands lender policies through and through, because you might service with lender A, you might not service with lender A, but you could service with lender B. And you might be getting a similar deal in terms of interest rates and all, but their lender policies might allow for more appetite for your situation. So I think it's really important that you're presented a sort of a range of lenders, or when you're speaking to your broker, you understand that there are things outside of the big four who can definitely accept your deal. It's just that to which lender do we look at going with, and that's where it can get very complicated for, I guess, brokers who aren't as experienced in a range of lenders in their panel. They can get a bit caught up in what lender policies.
Well, they don't know.
Yeah, they just don't know. Yeah, basically. So,
And I guess the big thing about the second tier and third tier lenders that the big four have, you've got the NCCP, or whatever it is, National Credit Consumer Policy, or whatever it is, where the banks have to meet certain requirements. So they'll put, for example, CBA, you could buy a property for $100,000 and it rents for $500 a week, which is $26,000 a year over $100,000 purchase. The bank will cap it at 6.5% or whatever it is.
Yeah. The main four lenders, just going back to what I was saying, they are the most conservative lenders. They do have a lot of rules to follow, and their servicing algorithms are a lot more, just in general conservative there in comparison to some of the second tier lenders, third tier lenders. They'll throw extra just hidden repayments on top of the repayments you're making to make sure that you can definitely afford it, or you'll see things like rental yield cuts, which is a really big thing with the big four. I think the most generous one is 7%. I think 7% with ANZ, where whatever the value of your property is, they'll just take 7% of that, and that's the maximum rental that you can possibly receive. And then on top of that, they'll take away 20% of it anyway. So, yeah.
But if you own that same property, so it's $100,000 property, and rents for $500 a week, people out there saying, bullshit, you can't get deals like that, we get them. But let's say we buy one, we take it to the bank and get an 80% loan on it, then that applies. But if the person has a property and they own it outright, well then that's just the case. They own a property outright, there's no valuation required against it. They go, okay, well there's the income, it's owned unencumbered. Well then, how does that work with?
Yeah, so not all. Yeah, it is based on the value of your property. They don't typically do valuations on all the properties, mainly just the ones that you're dealing with. Yeah. So the ones that you're refinancing is the one that you're purchasing are the valuation, the properties that they'll typically do valuations on. But they won't go through every single one, and seeing what the value of those ones are.
Yeah.
Yeah.
Lisa just said, "You know your stuff, Pete," and she gave you a high five, right? A lot of people don't realise, like, as I said at the start of the thing, I come on and like, yeah, I buy properties at cheap, pow, 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 10 properties, 20 properties, 30 properties, right? Like Oprah Winfrey, right? But the thing is that, we've got experts, and that's what people come to you for, Pete.
Yeah.
And that's why we've got those large portfolios. So I don't know who looks after Lisa now. Maybe she'll want to chat to you. I don't know who her broker is. I think she needs to be brokering. So let's say, for instance, I don't know, like I've seen things that have amazed me of recent times, right? These products have been created from these second and third tier lenders. There's Lisa's going to contact you, right? So I've got a new fan.
There you go.
Everyone else should too, right? Everyone else should. There's only, one Pete. It's only got 24 hours in the day, but yeah. Colin just asked, does any second tier lender do desktop valuations or only the big fours?
Yeah, I believe Bankwest, who's I think your CBO owns Bankwest, but they do desktop valuations. There are second tier lenders that do desktop valuations, although you will typically see full valuations for the vast majority. You don't really have really any say. They just sort of do it, and then you'll figure out later if it's a desktop or not.
Yeah.
So you have a lot more flexibility in that sense with the Big Four. Although sometimes the Big Four can spit out a desktop valuation back to you, but then the assessor, or even if it's for example, an LMI deal where you're doing 90%, where the LMI lender would probably want a full valuation, and then all of a sudden you'll need to go through a week's worth of just waiting for a full valuation to come back when you've already done a desktop valuation prior to that. Yeah.
Awesome. You just ask Pete, and he'll give you the answer, right? So just keep those questions going. I've seen some products, right, and some of our investors are like, "Fuck, really? Like, you can do that now, right?" There's things that people don't know exist, right? Like, so I remember we had a client in 2011, right, and I'd been helping him out. I got I don't know, 10 properties, right? And he came in so chuffed one day, right? I was in the bank, and we were doing deals at the bank, and he came in to see the bank person that wrote the loans, the home finance manager, and he came in so chuffed. He'd been working for 20 years at the same company as a PAYG.
Yeah.
Right? And he came in and he goes, "Great news! I was getting paid like 150K. Now I'm getting 200K a year. I've turned contractor, got more money I can service." Right? And the bank manager person went, "What the fuck did you do?" Right? It was the worst thing that he could have done, right? And what that did was snooker him for a period of 2 years.
Yep.
And we saw that big boom that happened in 2008 and 9 when it went up, and he missed out on the boom because he changed his employment position. There is alternatives to that I've seen of recent times, like payroll companies, where you can get your income paid from a payroll company, and those sort of things are out there. But now there's loan products that I've seen people get loans for one-day ABNs and stuff like that.
Yep. Yeah, there's a few of those out there, yes, circulating in the market. Typically, we look at lenders. I think you can do one-day ABNs. There will be premiums that being interest rates and stuff like that, application costs, app fees, and everything like that.
But you keep it for a year, get your business up and running.
Yeah.
I just actually seen Matty. He said, "How long after a business owner should wait to get finance after starting a business?"
Oh, there you go.
Literally,
there you go.
Talking about it.
There you go. Well, to answer that question, I mean, typically, I've seen, ANZ will do 18 months minimum for an ABN. Generally, though, you'll see 24 months. A lot of lenders will look at 24 months and then ask for 2 years tax returns, company tax returns, and company financials. But ANZ will do 18 months, and I believe NAB does as well, where then they'll only really ask for, I know ANZ will just ask for the, just one of the 2 years. So either like this financial year or the one previous to that, up until a certain point. But yeah, you just have to provide one set of financials, and I'll work off servicing based off that rather than the general lending criteria where they ask for 2 years and then they'll mediate between, where like it's whatever the lower is. So whether if you made more in the previous year and then less on the more recent year, they'll just take the more recent year's lower income. Otherwise, then they'll just average it out and take whatever the average is. So yeah, there's you can be with like a big four with 18 months ABN.
I think it's important to consider before you go and set up a business, like plan for that, because should you transition from being a PAYG to a self-employed over 2 years, could you do a side hustle with your business and help build that income up so you've got some revenue coming through, and then make that shift just as you lodge your tax returns, you're going to have a good year. Do you really need to be a business owner? This is not a question. This is not even a statement. This is not something that I even talk with me about. But like, do you need to be, like, why do you want to be a business owner for, right? Like, I see people, they go, oh, well, the husband and the wife are both the business partners, right? Or the husband and the wife have to buy a property together. It's like, no, leave the other person out of it. That person could be an employee. That person could keep doing that. You're putting two people on the contract, how that loan gets structured as well. Like, if you've got a husband and a wife on it, well, then sometimes it's better to have both. Sometimes it's not better. Would that be fair to say?
Yeah. It depends on each person's like personal situation as well. Like one like person A might have a bunch more debt, which is just going to ruin servicing if you bring them into the picture. So there's a whole lot of things to look at when considering, like, is it worth bringing someone else on, or if it's better to do it by yourself. And just looking at both people's like situation and sort of deciding how that impacts the future servicing in your situation. Yeah,
it's not. I've said this for about 5 years now. People have a focus on their property. People just like novice people go, I want to buy a property, right? It's best to go buy a property. And I say, hey, cool, you can buy a property, but property ain't going to get you financial freedom. Like, how many do you need?
Yeah.
What's the end goal? What is the property meant to do? This is why you need a property strategy, which is what I talk about is treating it like a business, and having a business plan around that, and having your own strategy on what you need to do and how you're going to get there. But then I guess the next step to that is that it's not just the property acquisition strategy, it is the management strategy of how you're going to increase revenue and be a revenue manager against your portfolio. Then the other part of it is your debt strategy, which is not just how we're going to get the debt, how we're going to repay the debt, what is that strategy going to look like, how am I going to present myself to the banks, what is the bank going to think of me when they look at me, and what work do you need to do to get there. We've got people that haven't done anything for 5 years, and then they're like, shit, I just need to do that, and I can buy 5 more, 10 more, and it's So cool. What about, like, let's say for instance, some chick's pregnant, she's having a baby, got off work, right?
Yep.
They say anyone can have a baby nowadays, but let's say it's the lady's having the baby, and she's taken 6 months maternity leave, 12 months maternity leave.
Mm-hmm.
They're paid at a certain rate of income, like a half income for 6 months, 12 months, whatever. Can people borrow for that and borrow through maternity?
Yeah, for sure. There's definitely lenders that can consider like income, return to work income. I think I've seen like a maximum of like 12 months. So within 12 months, they're generally, from what I've seen, and it's always subject to change based on like which lenders can accept it, but they'll require mainly like a letter from your employer, just sort of stating like your return to work date, how much money you'll be making per year once you return, if you're going to be back on like full-time or part-time or casual, however that's going to be structured. And they will, the lender will be able to consider your situation based on that future, provided that you have enough savings to cover the deficit. So, for instance, if you're like 4 months away from returning to work, then you need to cover 4 months worth of the deficit that you'll incur should you go ahead with that loan.
And is that through every bank, or is that just for some banks?
That's for some banks, and each lenders have their own, who can facilitate that, have their own sort of nooks and crannies. So I guess that's sort of when it's best for us to look into your situation specifically, and just sort of determine what actually out of those lenders that can accept your maternity leave, which ones would probably be best for you. I guess that's sort of where we sort of step in the picture in determining which lenders best suited for you.
Beautiful. Thanks, mate. And like, we touched on the self-employed, right? But what's the big difference? Like you got self-employed and you got PAYG, which is normal salary you work for someone.
Mhm.
What is the difference between them? Like, is there any things that you specifically think on those 2 points?
In terms of PAYG and self-employed?
Yeah.
Yeah. Just immediately, you can split self-employed into two categories. Where you got the traditional, you got like your traditional self-employed assessments where you'll look at their financials. Let's say they're in like a company, you look at their company financials and net profit before tax, and you'll look at how much they're sort of profiting as a business, or how much they're making, and you'll assess servicing based on those figures. But what I've seen in recent times is they have a more simplified version, which is where they just, if you're paying yourself a wage from your company under a PTY LTD structure, they will take, you can, as long as you meet a few criterias, so like namely like been paying yourself for like 6 months, and you have like income statements to show it and all of that, you can actually look at servicing. You can look at servicing just based on the wages you're paying yourself, so it's sort of like a PAYG. But yeah, for self-employed, it splits into two different sections, and not all lenders, some lenders do facilitate that, the payslip, just looking at your wages and just working off that, and you won't need to provide any tax returns, no financial statements, none of that, what you would usually have to provide. Instead, it's just pay slips and like income statements, bank statements to prove you've been paying yourself. Generally, I think it's like around 6 months. They is sort of the criteria there generally. Yeah. But then, yeah, and that I guess is really similar to just like a regular PAYG, where you just look at the income you're making for the year, or if it's like part time, then it's like your hourly rate, but your mandatory hours multiplied by your hourly rate, and then anything else thrown on top of that. So, yeah. But I guess like the big thing is that, yeah, people who run a company, who pay themselves wages, can, it's possible to look at servicing just with pay slips to be provided, which is, yeah, a new thing that's sort of hit the market within like the last like year or so.
So there's low docs in there. But
Yep.
What about no docs?
No docs, man. Yeah, I mean, you've got low docs, no docs.
Is there such a thing? Oh, we can go all day and say, oh, these are the ins and outs of it, but is there such a thing?
Honestly, I haven't done any no docs, but I think Rose would probably be able to answer that.
Your
one.
mum has.
Yeah.
Rose has. So, and I guess that comes from the team, right? That there's all different. You know, you'd say that out of your colleagues, you've all got different like strengths and different things
Yes.
you can bounce off each other.
Yeah, 100%.
And it's like when we come to you guys with a deal and we say, hey, we need to make this happen, what do we do? And you sit there and go, oh, can't do this. And sometimes even I'll say, but what about if we do it this way, right? And it's like, oh yeah, cool. And then we can copy and paste it over to other investors. So that guy that got the 17 unit complex that's getting that, we're going to be able to copy and paste that strategy over like 10 times over. So yeah. Cool, and I guess this is a big pet peeve, and I don't think that we've even talked about this tonight, but trust, right? People think that they're going to get a trust,
Mm-hmm.
they're going to be asset protected,
Mm-hmm.
they've got all these tax benefits and all that. Just very clearly, I'll just say to everyone, I reckon that 95% of my investors that have the 10, 15, 20 properties wouldn't have a trust, they would just have their personal.
Yeah, from what I've seen, for sure.
You'd have some that have maybe a quarter of them or a third of them, maybe a third of them will have a self-managed super fund, which you can buy properties inside a self-managed super fund. We can't give you financial advice on that, but it's definitely a possibility. We've seen people build self-managed super funds, which they have to go and get their own advice and all that stuff, which have come to us, 200 grand's a good figure, and it works very well. And we've seen people build really very large portfolios inside their super. If you're buying a property in your super, if someone can't service because they're max servicing and their personal loan and stuff, can they still buy their super and get a loan?
Oh yeah, for sure. Yeah. Yeah, 100%. It's looked at separately, so yeah, you definitely can look at purchasing under your super if you're maxed out with your personal.
But why? How does it work?
Well, they look at how much income your super is making essentially, which is separate to like your personal income.
Yeah.
And they'll see like your contributions, mandatory and like voluntary, and they'll determine servicing based on those figures rather than like your personal like portfolio.
Cool. And what's the issues that you see around trust when people go get financing and trust? What causes an issue with that trust? The bank?
Typically, it has a lot to do with the actual serviceability itself. When you're purchasing under a trust, you can't apply any tax deductible benefits or negative gearing benefits, which will help. And to be honest, it really does impact servicing. Like a lot.
No financial advice. If you want to go put it in a trust, go do whatever you want to do.
Yeah.
But if you can't get a loan for it,
from a servicing point of view, from a servicing point of view, it does impact it quite significantly. But there's obviously reasons outside of servicing why you would look into getting properties under a trust. But from a servicing point of view, it definitely does negatively impact it, and it will just sort of mean that you have less capacity to service on your next go.
So add backs. It doesn't necessarily mean that you're buying a property for $1 million and it rents for $500. You've got a big negative gearing bill. It could be just add back of the taxing.
There's a whole bunch of things that goes on in the background once you click the negative gearing benefits button. But you tend to see a few $100s saved per month each time you can apply it, as opposed to not applying it. And a few $100s, can be like $200 based on your loan amount, obviously, but it can take away like a very large chunk after one or even like 2 or 3 purchases. You're probably missing out on some more properties if you can't apply that benefit. Yeah.
Thanks, Pete. I just noticed Rose has hopped online in the comments answering some questions herself. We've got the award-winning broker there. She's Rose is going. Rose is dumping in there.
She's firing away.
So the other day, what happened? What did you do? Where'd you go the other day for the trip?
Went to Hamilton Island. Yeah, we went to Hamilton Island for the like brokerage awards, and Rose won the Broker of the Year. So
there you go. Out of
number one,
out of all the brokers in the country, right? Out of all the brokers, most prestigious award Rose got, and Rose is obviously the head of the team, but once again, I could say here I'm the best person in the world, but it's like I'm only as good as what I am because there's good people around me, and as a team, Rose has come out with the Broker of the Year award.
Yep.
You picked up a few.
I got it was the Young Excellence Award from Pepper Money, which was good. So yeah,
you have to build some more cabinetry out of all your awards stuff. So.
Yep.
So it's good. Depreciation, like how does that affect servicing? Is there
depreciation? Yeah, it splits into 2 things. So you've got instant write-offs, and then you've got just the natural depreciation. So it's I think it's called diminishing depreciation or whatever it's called. Yeah. So with the instant write-offs, in terms of serviceability, the way it works is that with lenders, if you have depreciation in your tax returns or your company financials, it can count as an add back. So that basically means you can throw that expense back onto your income. Now, where it sort of divvies up is that whether it's an instant write-off or a natural depreciation. With the instant write-off, you can add back that income, that expense back onto your taxable income. So that money is when looking at servicing, it is taxed. So there's a portion of it lost, as opposed to the second, where it's the natural depreciation, the diminishing depreciation, where it's actually non-taxable income. So they can take 100% of that expense back and not throw it onto your taxable income, but it's on a separate section where it's an add back for the real depreciation, where it's not actually taxed, which improves your servicing more than what it would do as an instant write-off in terms of servicing. Yeah.
Cool. I just had a thought, right? We're sort of getting towards the end of questions and answers and stuff, but we're getting for people to ask questions. So if you have questions, ask them through to Pete. Pete will answer them for you now. If you do want to get more insight, reach out to Pete. You can access them through the link in the comments in the description of this video. But one thing I realised, I always think when I look at my accountant, right? The accountant, someone just said their tax is theft, right? I always think, as an accountant, you want the accountant is there to protect you and to guide you and to get you out of everyone's out there to try and get you in life. And people can go to a bank. They can just go to any bank and they can go get a loan. They can go to any broker and go and get a loan, right? But what you need as a person getting a loan is you need guidance, you need mentorship, you need the ability to nurture you, to get you where you need to be. So people come to us, like, I think the most important thing when you come to a broker is that you treat it like a business. I've said from day one, treat your investing like a business. Yep. When you come to Pete, when you go to your own broker, when you go to anyone else at Zinger, come with all your numbers, right? Share with your numbers. This is where I'm at, this is my strengths, this is my weaknesses, this is what I've got, this is things I can improve on. Having that holistic view, then we can go, okay, cool, that's where we're heading to, this is where we can work on, this is what we need to do. But then once Pete and the team have got the full picture, then it's your job to then go to the bank and go, who is the best bank or the lender to give the money to this person? Like, people ask for shit every day and they ask for it wrong, right?
Yep.
It's like, I don't know, I'm just going to use dating as an example, right? You go to the club and you go, hey, cheap, whatever, right? It's not going to work, right? And it's how you talk about that to get the result of what you want.
Yeah, what you want, yeah.
So if you want the result of lending, you want to go and, get the loan, you want to go get the finance. It's like, well, what does the bank need from me? Everyone's looking at, and this is where I see everyone really fucks up lending, right? Like the borrower, is that they're thinking about what they want. Right? They're always thinking about, I want a loan for this, I want to do this, I want to do that. It's not what you want, it's what the bank wants you to give them for them to give you the money. They want to give you money. They are in the business of giving out money.
Yep.
They make money from giving you money. They want to give you money. That's why I always laugh when people go and rob a bank, right? See how many people will be in jail. They're like, oh, I went to the bank and thought up a gun, I got 10 grand. It's like, you're a dickhead, right? They want to give you millions of dollars. Just go in there and be nice and say, hey, how can I get millions of dollars? So as your broker, it's important to understand. Someone here saying who wants to date me in the comment section. Thanks, Paul. You said to do a shout out to him, so I think that's our shout out to him. Hope he's well. But it's important to position yourself well for the bank to get the result that you're looking for.
Yep.
And I know that 90% of the problems out there's probably 90% of the people that think they're shit luck, broke, out of chance being able to borrow can do something, but it's like, what do they need to do to make themselves appeasing to another lender?
Yep.
So
Yep.
I'm going to say, like, cutting the rat tail off makes you more attractive, right? How do you make your financials more attractive to the bank? So very important. And Pete knows how to get you there. The team knows how to get you there. You want to make sure your broker or your bank person knows how to get you there. One bank, you will not build a portfolio unless you're on $1 million a year. And that's not our clients, right? Our clients are, what would be your average incomes for people that you would?
That I've seen?
Yeah.
Honestly, between like 60 to like 90 is generally what I've typically seen, 100K.
60 to 90 to 100K, right?
It's all very possible.
And how many properties do they get? 5? 10?
Yeah, upwards of 5. Yeah.
Upwards of 5?
Upwards of 5 for less than 6 figures, yeah.
Yeah. I actually met a gentleman the other night at our speaking event, and someone asked beforehand, is our event that we had on the weekend going to be the live event? I don't know, it's been recorded, hopefully it's out there, everyone should have attended to it. There were limited spots. Whether the tech worked or not for the recording, who knows, those things don't work sometimes. That's a story for another day. The microphone wasn't working, so I don't know if it recorded. But there was a gentleman there, and he bought 5 properties, right? He's working 80 hours a week. He's working 2 jobs. I fucking love the energy, right? If he's watching, he knows who he is. He came up to me, and he said he just bought 2 properties. He'd never used us. He'd bought them from elsewhere. He said, "I'm trapped, right? I can't move forward." I'm like, if you're working 80 fucking hours, you're definitely earning enough money, right? As a young bloke like 25, I'm assuming around that age. If you're older than that, it's going to be complicated. If you're younger than that, but, I'm just guessing, right? But say he's 25, he should be able to buy more than 5 properties, right? And the one thing that occurred to me that I thought was the property that he had bought, the last 2, they were good deals because they had equity and stuff in them, but they were such a high purchase price that I could see it being a bit of a hurdle. So I think, for example, they were like 400 grand each, but they're renting for like $400 a week.
Yeah.
But if he could have bought, say, 4 properties for 200 grand a piece, and they were renting for 350 a week, then he would have had 350, $1,400 a week instead of $800 a week, and then that would have helped the servicing for another 3 properties after that.
Yep.
So the property strategy and the lending strategy come hand in hand, and that's why we're here doing this webinar. It's all the faith of life. So cool. Questions for Pete? I'm going to go through the comment section. Nothing silly, please. That would be great. Everyone behave. How many litres in the big rig? I don't know how many litres my car chews, but it's got a couple 100-litre tank in it. So I want to grow my, Nick said, I want to grow my portfolio from 8 to 30. Let's go Zinger. You know where to find us. Click on the link above. Here's one here. Is there a way to break out of a fixed home loan without paying interest, paying a break fee? I've got my thoughts on that.
So it comes down to the economic loss of the bank that you fixed your loan with. So typically the way that works, from my understanding, is that they will look at what the current fixed rate, the going fixed rate is, if they were to take your money away and fix that with someone else in today's market. So if your fixed rate is lower compared to what the current going fixed rate is right now, that means they won't make any economic loss on your should you break away, and generally that would mean that there won't be any break costs that will incur. If it's the other way around, then they do make an economic loss, then there'll be fees that will incur. So it's always good if you're curious to just call up your lender that you're with and ask, if you were to break away today, what would the costs be? And they should be able to just give it to you. Yeah.
Awesome.
Yeah.
You said that very much more elegantly than what I would have. So thanks, Awesome. Cool. I think that's all that we've got here as far as questions for you at the moment. There was some beforehand, but they've been pushed off because there's lots more comments in there. But on that note, how can the audience contact you? Is there any specific ways or email addresses you want to do a shout out to?
info@zingerfinance.com.au if you have any inquiries in terms of getting in touch with one of us or getting in touch with me.
Yeah.
You can. I think the best would be info@zingerfinance.com.au for sure. Yeah.
Do you know the phone number for it or not? I know the B.Invested hotline all the time because I said
I used to.
That's all right.
Yeah, I can't.
The link's in the description here. Just push there. That's the quickest way. Actually.
Yeah, that is the quickest way.
But cool. So look, I really appreciate that, Pete. I think that everyone watching this has got a lot of value out of that. So thank you for that. And thank you for everyone for watching and tuning in and spending your Tuesday night with us, or whatever you're watching this or listening to this, whether it's on different platforms or whatnot. You can catch up with us every Tuesday or every second Tuesday on Facebook Lives, which get restreamed in other platforms and whatnot. So if you need any help with anything, just reach out. You know where to find us. You know what we do. You know what we specialize in, and the results are there. I've got the team of experts. Your broker won't talk like Pete. I know that, right? They could have been fucking more grey hair than I have in my head. Been doing this for 50 years, and they still won't be able to give the level of knowledge that you have around this. So reach out to the team. That's what we do. We'll catch up soon. Thanks for watching. Thanks again, Pete, for all that you do.
Oh,
and
good.
Thanks for all of the clients that you help out to get their large portfolios. I just love how you just threw it off your tongue. Like, what's the normal? Oh, it's between 60 and 90 grand income, and then you start at 5, right? 5 properties. Because people don't talk about that. You can't get to 5. Like, your broker's probably sitting there going, you can't do shit. You can do 2. You can do 1. Don't be silly.
Yeah, no, I've seen it time and time again. Again and again, it keeps being proven to me it's possible. So, yeah.
And you like to prove it wrong. You know, you like to challenge it.
Of course.
So, thanks, Pete. Appreciate that. Thanks, everyone.
Thanks, guys.
Bye for now.